And from #1 Volatility Boulevard in scenic Cape Cod, Massachusetts, comes the Short Vol Show Live, the only show that discusses the VIX term structure daily on YouTube. Thanks for watching, folks. My name is David Lincoln, and we'll be talking today about the term structure, the end of the year, and volatility, all things vol. So please stick with me for the Short Vol Show Live. All right, folks, so welcome back, and I just wanted to say, for those of you who tuned on to listen to me talk about stocks a few minutes ago and saw me playing a video game, I apologize. I started streaming Star Citizen, which is like the only video game that I actually play, last night, and I know some people saw that. I actually took it down because, I don't know, maybe I'll put it on another channel or something, but I want people, when they see me broadcasting here, to say, oh, that's the stock market, and to tune in. But if you are interested in watching some streaming of Star Citizen, you can leave a message in the comments. I probably will stream it somewhere because it's pretty easy to do and it's fun. It's very relaxing. The only thing more relaxing than playing a space video game is watching someone else play a space video game. So check it out. And I just wanted to wish you, first of all, a Happy New Year's, and thank you for tuning in through the year to this channel. And it's exciting. A new year issued in. I'm excited about it. I tell you what really excites me is resetting my P&L, because this hasn't been a good year for me P&L wise, unfortunately. Starting with the February, it really just went downhill from there. I had a strong end to the year before. I just got whacked in February, and I never really quite recovered. However, optimism is high here at One Volatility Plaza in Orleans, Massachusetts, for the next year coming up. And I want to thank all Patreon supporters. Please, if you like the channel, consider giving $5 a month to Patreon. Links in the description. That would really help things out here. And always support independent media. We're up against some big guys like CNBC, and we just don't have the funding they do. So we need your support so that we can continue to give you original content. All right, so let's talk about the term structure for a second. And at first look, it looks like not a lot has changed. I mean, the lines are all sort of sloping in the same direction here, and we're still in backwardation, and the backwardation percent still 8% here. So really doesn't look like it's changed a lot, and that is just really testimony to how far out of whack things were and how far we have to come to get back into normalized contango. And when we're in contango, the term structure is pretty strong to stay in contango, and now that we're way in backwardation, it's taking a while to unwind. And I see this as completely normal in the process, and we've made huge progress again today, where we're finding that the roll yield, or the difference between spot and the front month future, is less than 2 points right now. That's huge progress from a couple days ago, where we were over 5 points in the roll yield. I know the chart doesn't look that much different as far as the shapes of things, but it is different, and it has come in a lot. Volatility down to what's showing on there, 26.29, but let's get the latest reading from here. Remember, VIX Central is usually a little bit delayed, just slightly. So it's showing about the same on my feed here, 26.31 for the VIX right now. And another day of market rallies. E-minis up 20 points right now. We did get to a point where E-minis were almost unchanged for a little bit, but then they kind of went back up again. I am fearful for people who shorted this and then are riding it up. I do think, however, I'm in agreement with a lot of the talking heads right now that the market seems like it wants to go up for a little while, but I would not say that this down move and all this volatility is over. I would just say that we're on the upswing for a second, but we can very easily be on the downswing again very soon. That isn't to say, however, that volatility is going to go way higher from here. I think that we could see volatility normalize even without reaching new highs again. I think that volatility could stay higher than it was, but I would not be surprised if we went down to, like, say, 22 to 20. Maybe it just sticks at 20, and if we normalize back into contango with the VIX around 20, I wouldn't be that surprised if that would happen. There definitely is a case for volatility staying higher than it was. Of course, last year, I don't see us returning to 11 VIX or anything like that. But there's a lot of distance between 10 or 11 VIX and here, and we should, of course, settle somewhere in the middle. UVXY down almost 5 points today, and but once again, still the bias to the upside if you look at the term structure. However, volatility just coming in as the VIX reaches some sort of equilibrium here after that recent spike. Let's take a quick look at the VIX chart, and you can see we're coming off of that spike. Let me get out of the way here for a second. You can see we're coming off of that spike of up to 36. And actually, yeah, the chart is really, let me get out of the way and make a smaller chart, because that chart really is kind of expanded there. Let's see. There you go. There's some numbers on the edges. So down to 26 and change now from a 36. So volatility in 10 points in just a few sessions here, which is pretty remarkable, but not that remarkable if you think that we were at kind of an extreme. So we're just kind of coming back towards normal here. If we compare the chart of the E-minis to that chart of the VIX, you can see sort of opposite. Market up, volatility down. That's usually the trend. And since we were at pretty extremes in the VIX, I wouldn't be surprised if, even if the market had been flat, that we came in a little bit here. Obviously, tax selling at an end as of today. Nobody knows what's going to happen in the new year yet. But, you know, we could turn a page, and all these things that seemed so bad just a couple days ago may not seem that bad all of a sudden. The difference between this market, of course, and the 2008 market or the 2000 to 2002 type market scenario is that there isn't some way overarching negative thing in the economy that is affecting this market. You know, 2001, 2002, the internet company bubble, remember that? When every .com, anything that had .com attached to it just exploded in price, and people just wanted to buy anything to do with the internet. And then and price to earnings ratios got really out of whack, and the market just did a big fall for a while. It was grinding lower. And then we had the the housing bubble. But right now, the overall economy, unemployment at a reasonable spot, inflation, there's some things that are inflated. Like, for example, if you want to go get a cast put on your arm, if you want some fancy medical procedure, that stuff has seen tremendous inflation. But of course, if you look at the gas pumps, gas prices down with the price of oil down. And so it's some things in inflation, some things not. It's kind of just by what formula you use to judge that, how much inflation we have. But by most views, inflation at a reasonable spot right now and not something to worry about too much. You know, it's funny. People complain about the price of gas no matter what price it is. Even if, you point out to people, wow, it was up to $4 a couple years ago, and now it's down to $2 and change, depending on where you are. And people still complain. They say, oh, well, the next town over, it was 2 cents lower. Everybody, grass is always greener, and everything's awful to people. It's too bad when they have that view. Meanwhile, VVIX down to 88. VVIX below 90 now. Pretty amazing. I did want to pull up this one tweet for you. It's been getting a lot of play. The Options Insider You're probably familiar with the Options Insider, Mark Longo and company, Gene. He says, it's time to join the VIX Crystal Ball party with your year-end 2019 VIX pick. And he lists a bunch of people's names. So this really, if you look down through some of the people that responded here, it's really kind of like a who's who of at least Twitter VIX people. You got Pat Hennessy, who's, often quoted. Bill Luby, who's also, well-known expert on the VIX. Matt Thompson, who's like the most quoted guy on Twitter. Yeah, you've got Brent, and Ophir. All these people who are kind of the people who always tweet about the VIX. So interesting. If you want to follow some people on Twitter as part of your interest in the VIX, check out the Option Insider in that tweet, and you can copy down some of the names in that tweet and add them to your Twitter feed, and you'll get a good representation of what people are talking about on Twitter about volatility and whatnot. And yeah, pretty exciting as we're coming into the new year starting tomorrow. We get to wipe the slates clean as far as our P&Ls. Now, I'm one of these people who does my taxes early at the first available moment, and I'm concerned with the government shutdown that this might back up the first time you're allowed to file taxes this year. Because I know a couple years ago when there was a government shutdown around this time, it threw a wrench into tax when you're allowed to file. Early filing and all that sort of thing got pushed back, and it may get pushed back again this year as well, which is unfortunate because like I said, I always like to file my taxes as soon as possible. I didn't used to get a refund, but then I was surrounded, it seemed like, by all these friends who were single moms, and they were always getting like $6,000 back, $8,000 back from their taxes. I remember one woman I worked with, and she just drove me crazy because she would get like $8,000 back from her taxes every year, and she would just spend it as quickly as she possibly could. It was ridiculous. She was like, I'm going to go to a hotel and just live in a hotel until I've used up all the money. And I said, don't you want to save it or maybe invest it? Or no, I'm just going to go to a hotel and spend it as quickly as I can. And so all these people like that, and I was like having, I had 2 jobs, so I was actually at the end of the year, they're like, oh, you owe $340 or something. So I was like, ugh. And interest rates being so low, I said, all right, well, I'm going to have them withhold extra out of all my paychecks so that I can get a bonus at the end of the year like all these other people. I know I'm just basically paying myself, but psychologically I can get a little cash at the end of the year, and I can invest it and do wise stuff with it instead. And so that plan being put into place, now all of a sudden with the government shutdown, it might take longer to get my hands on the cash, so to speak. So so for that reason, among others, it would be nice if we could get the government back rolling again. Yeah, so just to refresh for a second, monumental year for everything. Pretty much everybody who's watching on this channel right now, I was gained as a subscriber during this year because I really have had the most growth this year of any year. This channel's been around for about 4 years, but it was a gaming channel before, and it really only started in earnest about 1.5 years ago. So it's been a huge year. Really exciting, and I'm looking towards next year for some great stuff. There's some people who've been reluctant to come on to be interviewed because maybe they haven't been interviewed publicly before and they're a little shy or this kind of thing, and I'm holding their feet to the fire this year that they're going to come on and be interviewed. But volatility and the VIX haven't been around that long. We talk about that a lot. I mean, it's basically within 20 years, this whole VIX trading thing. Of course, volatility has been there for a long time, but defined as the VIX and also these prepackaged products to trade volatility, they're pretty young. So when we have a big event like we've had over the last few days, this really will go down in history and will help to define not only how we as retail people see this, but it will define how the people that make markets in the future see it, and how the VIX is priced moving forward, and how the term structure is priced moving forward. So regardless of how you've done in this event, and it seems to be kind of unwinding right now, and I don't know if it will continue that way or not. I can't see the future, but I did kind of sort of call the top in the last couple of days of the VIX up around 36 something, and better to be lucky than good. But it seems like we're coming off of that ramp up now and kind of normalizing back from this event, and it's time to kind of reflect on what happened, what it meant, and where we can go from here. I know some people, there's certainly people out there that are looking to scoop UVXY here and reload for another run back up to 90 or 100, and that could happen, but we are kind of on the downside of this hill right now, though. So I would be careful doing that, of course. Now, when I broadcast, I don't know what's going to happen in the future, and so looking back, maybe we'll look back in a week and the UVXY will be 100, but we could look back and it could be 70 too. So that's what makes these exciting times. Nobody really knows what's going to happen, but I can tell you the market certainly has looked a lot better over the last few sessions than the sick straight down stuff that was happening for a long time. And we'll have to see what happens into the new year. E-mini's right at 2,500 now, and there is some optimism coming into the new year. When we look at the chart that's like right behind my head now, it almost looks like, kind of the market's topping off, right? Because you got that bounce back, and then I know it's up, like E-minis are up 15, but compared with the moves we've had, it's almost like it's moving sideways on Friday's session and today. And even if it's moving sideways, it's a good thing because realized daily volatility is down. But B, it kind of looks like, maybe this is the end of the upswing, and then we move back lower again. So a lot to think out there. I can't tell you exactly what's going to happen. I can tell you that people are looking to scoop some of these stocks that are way down while they can a little bit. And my advice to you would be, if you've got a ton of cash on the sidelines, maybe scoop a little bit of either, I don't know, a general index, maybe the IWM or the SPY, something like that, and just slowly maybe put a little bit of money into that kind of stuff. You don't want it to go all the way back up and you kind of miss the boat completely. But at the same time, I don't believe that this volatility is just over, because all the unresolved issues are still unresolved. We do have the, the government is going to, the Democrats are taking over the House starting tomorrow, and will be probably more gridlock in Washington moving forward. So I don't know if that's good or bad for the market, but what the market likes is certainty, and we don't have a ton of that right now. So although we've had some nice good moves the last couple of days, when we're going up like this, you want to be vigilant to the downside, of course. And if you are short, I don't know, out of the money UVXY calls or something like that, you might want to cover. If you've been short volatility for the last couple of days, take a little bit of it off. Take that profit and lock it in, because this market's been all over the place. So trying to ride trends for days and days is very risky business. Ask the people that got short this market down, about a week ago, or the people that got long it about a month ago. It's tricky out there. So stay small, keep it tight. We're in illiquid times right now because of the holiday week. But and you know, if you button things up and you keep it tight, you don't have to worry, and you can go enjoy your New Year's Eve. And so that's what I want you to do. Thanks for all your support. Please please give a little on Patreon if you haven't already, and I will see you folks in the new year. Bye. Thanks for watching.